Hey everyone, welcome back. Hope you guys are having a great Thursday. So it was a weird day today. Bitcoin's down, miners were kind of mixed today. CleanSpark had a huge day. Markets were pretty much up on today. They were green. But we also have news that we have to cover first, which is going to be on Hive. They have a new analyst covering them, Stonegate, I believe. Then we have Riot providing their quarterly results along with Stronghold. So we'll get into all that data, but as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research. I'm investing in following coins and companies for full disclosure. And if you enjoyed this epic content, hit the like button, subscribe, helps me out tremendously. And I'm recording this kind of late. It's like 9:37. I promised you guys that I would have this out for today for Stronghold and Riot. So we're doing this, and let's take a look at what we have as far as the news is concerned. So Stonegate Capital Partners updates coverage on Hive Digital Technologies Ltd. They're using Q1 2023 numbers, it looks like. And takeaways from this are more tasks given to repurpose GPUs, name change industry evolves, position to benefit from price correction, so Bitcoin going up in value with the halving event coming up. This is kind of what they're seeing for them, and we have some data on them. They have them basically, if they're comparing the EV to a beta, and they're using 10x and 11x. The average of that obviously is 10.5x. They're saying $4.10 to $5.10. And then they're using also the EV to revenues, which is a 3x to a 4x, midpoint is 3.5x. So they're saying 4.51 to $6.14 with a midpoint of $5.33. And EV to exahash, 150x to 200x, midpoint being 175x. So they're saying 558 to 757 with the midpoint being $6.58 for Hive. For Hive, I have them right now at, based on my numbers, going back on historical data here, the last 3 quarters, current quarter that we're in right now, with a PE of 50% net income, I have them at $6.99. And then if we're looking at 75% net income, we're at $10.49. They're currently at $4.48. I believe that they are undervalued for currently. And then if we look at future estimates based on the current month that we're in, for them multiplying that times the 8 months that we still have left before the halving event, and then the 4 months afterwards with revenue cut in half, I have them at $7.05 to $10.58. So $7, and I mean, it's pretty close to where they have them. They have them kind of on the lower side, where I have them a little bit more on the higher side of things if we look at them, okay? So just wanted to point that out to you guys. Nonetheless, it's good to have more coverage on Hive. Okay, let's get into our next story here really quick, which is going to be, I believe, on Stronghold. So Stronghold provides their quarterly results for 2023, Q2, and provides operational update. I covered the operational update already. We're just going to take a look at the numbers that they did have here. Some things that I wanted to point out here is obviously they accelerated their hash rate guidance. We now expect to achieve hash rate capacity of 4 exahash by September 1st. So basically, they're going to get to that by the end of this month, which is 1 month earlier than our previous guidance and 4 months earlier than our guidance provided on March 29th. So that's great news there. And there are some things, however, that are of concern to me at least. So when we look at their numbers here, they didn't provide much as far as details. I mean, this isn't like the full normal 10K that we would see. They basically have the same thing here as they provided in the press release, and then they have management commentary a little bit, talk about liquidity conference call, and then they actually get into the numbers here. So these are the numbers that I used to put into my spreadsheet, and we'll go over that. But other than that, there isn't much details for anything else. I mean, this is only a couple pages. Usually these things are 40, 50 pages long, if not longer sometimes. So not a lot of data here. I still don't know what the actual number of shares outstanding is. We're going by the number, where was it here? I believe it was, and that's not even here, I don't think. Where was the number that I saw for it? 6 months, here it is. So I'm using this number as the current number of shares because they didn't provide the actual number as of the date of this was published, okay? And I apologize for the sniffling. I have allergies for whatever reason. They seem to happen from time to time on me. But that's kind of what we're looking at, okay? Let's take a look at the numbers that I do have for them right now. If we take a look at Stronghold here really quick, we'll go over some of the things that are of concern. Some things that are of concern, we'll get into in a minute here, but obviously 6.1 million shares outstanding. Stock price was at $8.08. That's as of today. Market cap is now at 49.8 million. The performance here has been really good here of 8 weeks. 10 weeks ago, they're up only 10.1%. From 8 weeks ago, they're up 77.5%. 4 weeks, they're only up 12, or they're down 12.6%, and last week they were down 20.13%. We've talked about the hash rate and all this stuff before in the operational updates for them. The concern here is coming down here below. So they reported revenue of 13.782 million. I had them at 17.437. I think they're reporting the Bitcoin mined that is a combination of their self-mining and what they generate from hosting as well. That's the only way that I would be off by this much. And when we actually compare the numbers or add the numbers together for self-mining and hosting, we get pretty close to this number as is. So I think that's the reason for my discrepancy of being off by 20.96%. So going forward, I'm going to use that number, 20.96%, and basically it's only 80% of the value here. So what I estimated for them to be at this quarter of 20 million, it's going to be actually closer to maybe around 16 million, but I just don't know. I wish they would break it down what they actually have for self-mining, what they actually got for hosting. That would make things a lot easier for me. And then also, based on this, my efficiency here for them is going to be way off as far as days of operation for them. Currently, I had them in July at 25 days, but if they have 20% only of that, well, they could be only operating for like maybe 18 days or something like that, 19 days. So that's something to keep in mind also going forward. I'll try to remind you guys next time I do a video on Stronghold as well. Okay, but here's what we have here currently. Based on the numbers, I need to update this actually. I need to put in the current quarter that we're in, which is going to be about 15.9, possibly, if things work out that way for them. So that way we get a comparison to all of them. So the last 2 quarters have been rising in revenue, which is good for self-mining. This current quarter that we're in is estimated at 15.9, so roughly around 16 million, depending on where they actually come in at. It's going to be tough. And going down here, custom mine 1 BTC. So for this one, I'm using also their energy cost, the fuel cost, and the operations side of things. So that's the combined cost for those 2 things, because fuel could be really low, but they also need to provide in there the operation side of things as far as people maintaining the machines and everything else. So that's being included in there as well. Bitcoin mined quarterly has increased a little bit here, and this is, like I said, for the combination of self-mining and hosting. Debt to equity, lower is better, obviously. They did increase here a little bit here from Q1, but not too bad here. And then current ratio higher is better. This definitely dropped down quite a bit here, so that's not a good part of it either. Total current assets has been declining every single quarter that we've seen here, the last 4 quarters. And the good part of it is, though, total current liabilities has also been declining. So it's kind of a little bit of a wash there, but there's still current liabilities are much higher than the current total assets. Okay, so that's a concern there. Okay, going down to the numbers here, we'll get into some of these metrics here that I calculate in a little bit. But here's what we have for them. Current assets, cash and cash equivalents is down to 5.1 million from 6.3 million. Digital currencies is up to 1.4 from 672,000. And accounts receivable is down to 2.3 from 4.7. Inventory is down to 4.1 from 4.7. Prepaid insurance is down a little bit, so that's actually fine. Let's see here. Other current assets is down to 1 million from 1.3. So total current assets is down to 17.4 million from 21.4 million. That's $4 million less. That's a concern there as well. Total assets. Let me see here. Equipment deposits. They're about the same as they were. Property and equipment went up a little bit here to 160 million from 158. Then the other ones stayed pretty much the same. Total other assets was up a little bit here to 169.8 million from 167.6. And then total assets was actually down to 187.3 from 189.1. Okay. Liabilities and stockholder equity. Things that have really changed here. Accounts payable was up to 16.1 from 14.8. Accrued liabilities also increased to 8.6 from 7.1. Finance insurance premiums actually went down, so that's fine. Due to related parties was down to 910,000 from 1.6 million. So total current liabilities is up actually to 29.2 million from 27.9 million. So that's an increase of roughly 1.2 million or so. And let me see here. That's the same. Warrant liabilities went up to 5.2 from 2.8. Long-term debt actually went down a little bit here, so that's slightly good. I mean, it went down, what, maybe 200 some thousand. And long-term operating lease is about the same. Current contract liabilities up a little bit here, up about, was it 160, 170,000 or something like that. Total long-term liabilities is up to 65.8 million from 63.4. Total liabilities is up to 95 million from 91 million. So that's a concern there. Okay, going down here, total stockholder equity is at 187 million, down a little bit from 189 here. And then here we get into the revenue side of things. So revenues did increase for them for their own cryptocurrency mining, which was 13.78 million compared to 11.29 in Q1. Q4 was much higher than that. It was 18.2 million. And then energy was only 740,000 of that. So that's way down here from the 2.7 million. And let's see, crypto hosting. Hosting was actually up to 3 million from 2.3. So like I said, if you include cryptocurrency mining and their cryptocurrency hosting capacity and other, if that's getting transferred over into Bitcoins, that pretty much is what I had them at 17.49 million. And then I had them at, where did I have them at? 17.437. So really close to that. So that's kind of what I think they're including in the Bitcoin that they mine, that they're reporting Bitcoin being mined. Okay. Let's see here. Those are, obviously, capacity is down, obviously, like we said. Other is down as well a little bit here. So total operating revenue was up 18.2 million from the 17.2 million. And that was mainly because of the increase here in cryptocurrency mining and cryptocurrency hosting. Okay. Calculated crypto mining expense. So this is where I'm getting the expense for where I do the Bitcoin cost of mine Bitcoin. So what I'm doing here is I'm taking the cryptocurrency mining, dividing it by the total operating revenue, getting a percentage of that, and then I'm multiplying that by the fuel and the operating maintenance costs to get a rough estimate as what the cost to mine one Bitcoin is for them. Okay. I don't know if that's the best way to do it, but that's the way that I figured out might be the best way to do it. Let me know if you guys agree or disagree down in the comments below. Okay, so fuel. Fuel was down to 6.2 million from 7.4. Operating maintenance was up a little bit, 8.8 from 8.4. General administrative was up quite a bit here, almost 1.5 million more. Excuse me. We'd love to see that come down some more. It has been coming down for the most part here over the last. It's kind of up and down. It seems like it's down, it's up, it's down, it's down a little bit here, or yeah, we're up here, we're down, we're up again, and then we're down, and then we're back up. So I'd love to see that be a little bit lower. Depreciation and amortization was up to 8.6. So total cost of operations was at 33.8 million compared to 31.8 here. And then operating loss was 15.5 million instead of 14.6. Seems like they're going in the wrong direction here. They should be coming down like they have been here for the most part over the last couple of quarters. Operating income expenses, let me see here. Interest is about the same, a little bit higher there. This changes in fair value of warrant liabilities. That was way up here. And net loss attributable to common shareholders was 8.3 million. So that's good there. And compared to the 28.5 million. So they only lost, based on the numbers here, $1.35. So they actually lost more per share than they did here at 65 cents. And that is mainly because they had more shares out here than they do over here, based on what that was being reported on those quarterly results. Okay, now if we take out the minus depreciation comprehensive income, so if we get rid of that depreciation that's in here, which is right over here of 8.6 million, they would actually be slightly profitable with 298,000 being in profit with 5 cents per share roughly. Okay, so that's kind of how the things work out for them. So with that being said and done, they definitely have to work on some things here. Love to see the operation, general administrative costs coming down. Would love to also see them, what was the other one here? No, not that one. This one, obviously, would love to see a breakdown of the cryptocurrency mining, how much they made on that, along with their hosting for it. Get that separated out. That would make it a lot easier, and we could actually see how efficient they are. Right now, it's going to be a mess with that. We're going to try to figure that out as best we can. And what else we have here? Let me see here. I think that's it. I mean, the biggest thing, fuel has come down, which is nice to see the fuel price coming down. But just operating and maintenance, kind of keep an eye on that one, and general administrative as well. But even all, based on the latest numbers that we do have for them, with the current quarter, we're using the 15.97 million instead of the 20 some odd million, or whatever it was down here, 20 million. They are still way undervalued, in my opinion. With a P of 5, this should be around $24.04 roughly to $36.08. They're currently at $8.08. So that's basically, what is that, another 2x, 3x from here to get to that. And at that point, they would be, if we do 3x, their market cap would then be around 150 million instead of the 49 million that they are right now. Right? But the reason they might be beaten down is because of all of these extra costs that are unfortunately hindering their break-even points and profitability and all this stuff, with all things said. But I still think that they are undervalued based on this. They just need to execute. I think they need to provide more data for the investors on the monthly production updates. Like I said, break it down between what you actually got for mining, self-mining, hosting, other things as well in there that I think would help out. And yeah, they just got to execute. But still undervalued in my opinion. Okay, so that's Stronghold there. And let's take a look at Riot's going to be next. So we'll pull that one up here and go over here. Okay, Riot. So Riot also provided their second quarter 2023 financial results. They also provided current operational and financial highlights. We've covered all of this stuff before with them growing, where they're going to be growing to. They bought obviously a lot of miners from MicroBT. We talked about that in previous videos. And down here is the chart of where they might possibly get to in the next, like possibly in 2025, if they execute on the remaining miners that they could possibly purchase at the same rate. So they're going to be getting to 20.1 exahash. If they execute on the rest of the contract, they could get to 35.4 exahash sometime in 2025, maybe 2026, if that happens. Okay. They talk about the ATM offering as well. I think we covered that as well. So we'll just take a look at the numbers that we do have for Riot, and we'll call it a day. It's been a pretty long day here. We'll take a look at the market as well, see what's going on with those. Take a look at CleanSpark, how they did today. They had a fantastic day. But yeah, so that's that. Right, so 175 million shares outstanding, and I think I'm using the most recent data on that one. Double check. Nope, 185, so that should be there. Okay, good thing I double checked. Stock price today was at $15. We're using the most recent data that we do have for them. Market cap is at 2.78 billion roughly. Performance-wise, they've done pretty well here in the last 12 weeks, up 54%. 8 weeks are up 64%. Last 4 weeks, they're actually down 10%. And last week, they were down 6.91%. Their BTC production, we've covered this in the past. Their future hash rate is going to be 20.1, like we said. Current hash rate is at 10.7. They did state in there that they are the dry coolers to fix the facility are on their way, so they should be getting that back online. They said September, and through the rest of the year, that hash rate should be getting back online there. So that'll definitely help them out as well. Let's see here. Taking a look down here. So here's the big question, depending on where things go. Last 4 quarters revenue for self-mining has been increasing nicely ever since Q3. Q4 was up, obviously. Q1 was up. Q2 is up slightly. But for this current quarter that we're in, I have them actually at the lower, 35.58. Excuse me, for self-mining. And that is based on the simple fact, let me take a look at it down here. So they mined only 12.7 million in June. They mined 12.3 million in July. And then I have them basically mining the same amount in August and September. September I may be mining a little bit more, depending on how much they have to curtail and depending on the weather. So they could possibly get closer to maybe the 40, 45 million, but I don't know if they're going to be able to get to 49, depending on where Bitcoin goes. If Bitcoin goes down, they're going to be right around this area. So this is obviously in best guess estimate right now until we get more data each month going forward. So we're still got to get data for August and September to see how things work out for them. Okay, but that's kind of what we're looking at right now. Now, last 4 quarters operating costs for self-mining have been, for the most part, you could say pretty much flat. 22 million here in Q4, almost 22 million in Q1. And then they had 23.6 million, so up a little bit here in Q2, but their hash rate has also grown as we've seen it here as well in this current quarter a little bit. So that's to be expected. Okay. Let me see here. Custom mine 1 BTC minus depreciation. So this is what I'm getting for them, 13.32, which would be the cost that they provided for us, divided by the number of Bitcoins that were mined for the quarter. Bitcoin mined quarterly, you can see here that they peaked here in Q1 with 2,110. They're down a little bit here to 1,775. They have been curtailing quite a bit, and that's a result of that. But they do have the credits from the energy that they get as well. So keep that in mind. Debt to equity has also come down here, which is good to see. Lower is always better, and current ratio is higher is always better. So that has gone up to 6.49. So that's great there. So as far as financially sound they're very sound. No worries there for them. Total current assets increased to 482 million. This is the highest they've had in the last 4 quarters, which is good. And then total current liabilities actually went down to 74.3 million here in Q2, which is also good to see. Okay, coming down here, we'll get back to some of these metrics here as well towards the end of the video. Current assets increased to 289 million from 158, so that's good there. Accounts receivable went down a little bit here to 13 from 19. Contracts assets, including retained age of 3 point something, that actually went up to 19 million here. Prepaid expenses went down a little bit here to 20 from 22. Digital currency went up to 140 from 121. Power credits, it looks like it stayed the same, and their total current assets went up to 482 million from 365. So that's a really good improvement there. Let's see. Property equipment actually went down here to 699 from 717, which was kind of strange that went up here in Q4 or from Q4 to Q1, and then it's back down a little bit. Deposits is at 30 million from 32. Intangible assets went down to 18.6 from 20, and then we have derivative assets went up to 104 million from 91 million. Right of use was pretty flat for the most part. These two are flat as well for the most part. And the total assets increased to 1.358 billion from 1.25. So really good numbers there. Current liabilities. Accounts payable and accrued liabilities went down to 12.6 million from 19.6. So that's good there. Also, contract liabilities went down to 3.1 from 5.3. So that's good. Accrued expenses went down to 27 million from 82. So that's really good. That's where they had a lot of change there. That helped out. These are pretty much the same. Operating lease liabilities actually increased here to 2.3 from 1.3 million. So total current liabilities came in at 74.3 million compared to 112 million. So that's really good there as well. So financially, like I said, they're doing really good there. Total liabilities came in at 118 million compared to 158 million. So that's down nicely as well. And stockholder equity is at 1.358 billion compared to 1.25 billion. So that's good there as well. Revenues did increase, like I said before, to 49.7 million from 48 million from the prior quarter. Mining increased. Oh, that's that one. That's the mining, the self-mining. Hosting actually went down to 7.6 million from 9 million. Engineering went up to 19.3 million from 16 million. Other revenue pretty much flat. And then total revenue came in at 76.7 million compared to 73.2 million. So it's on the upward trajectory, which is good to see here. And then expenses. Cost of revenues went up to 23.6 million from 21.9 roughly. Mining, that's mining part of it. Hosting was 22 million from 25 million, so that's down. So that's good there. Engineering went up to 18.1 from 15. So that's concerning. It's still profitable though. But hosting, if you look at it, expenses 22 million compared to only a revenue of 7.6 million. That's a bleeding business there. That's one that I don't like. Okay. Also, selling general administrative went up to 19.8 million from 12.6. That's a big jump in there. That's got to also probably include share-based compensation, I'm guessing, in there. This 12.6 was one of their, well, third best here that they've had here. So I'm guessing this was probably share-based compensation. Depreciation and amortization went up to 66 from 59. Change in fair value derivatives. Let me see what else we have here that we really care about. So total cost of expenses went up, actually went down to 109 from 130. And that might be contributable to, what do we have here that's down? Well, we have some negative numbers here that probably brought it down as well. 19, yeah, we had 13, 13, we had 3, negative 13.5. So those are the ones that brought it down. Gross profit was negative 32 million compared to 56 million negative. So that's good there. That's getting better. Gross profit percentage was negative 42%. So if we look at self-mining gross profit, that was 26 million roughly, 54% or 52%, sorry. And then hosting gross profit was negative 14 million or a loss of 180% roughly. So that's why I say hosting, I don't like hosting with them. I don't know why they have it. I think they have some older contracts that they're having to honor and they're just getting rammed by them. Operating expenses, interest and other expenses, 4.8. Income loss before income taxes was negative 27 million instead of negative 60 million, so that's good there. Net loss was negative 27.6 million from 55.6, so that's good there. Income per share was negative 17 cents compared to negative 33 cents, so that is definitely a lot better than where it was. So that's good there. Shares diluted was 167 million on that. And then if we look at the minus depreciation comprehensive income part of it, which is what I calculated also, they would have came in at 38 million. Is that right? Which number am I using here? I want to make sure that I'm using the right number. Depreciation of 66 million. Yeah. 66 million on depreciation. That would have gave them 38 million. And then why are they not coming up as positive on this? So it should be 38 million divided by the shares amount. So I think I have this backwards. Good thing I just caught it right now. Equals, so let's do that. Equals this should be this times 1,000 divided by number of shares, and we get, so they would have had 23 cents if it wasn't for the depreciation part of things. We can do that across the board. So definitely a big improvement here had it not been for the depreciation part of things. Okay, so overall, great job by them getting costs, or at least getting assets up, liabilities down. Love seeing that. And then looking at the numbers here, like I said, the cost to mine one BTC was at 13,000 compared to 10. And we're seeing an increase for a lot of these guys here as well in Q2. Debt to equity we already covered. But you can see the book to value, price to book ratio, enterprise value, beta as well. And then revenue to general administrative compensation, it's 25%. Not too bad. I'd love to see that be under 20. They had a great Q1 here, but like I said, I think it's mainly based on the stock-based compensation part of things. Okay. And I think that's it that we covered here. So that's all the data there. Based on all of this that we have data on right now, looking historically, last 3 quarters, current quarter that we're in, I have in between $8.86 to $13.29 with a PE of 20. They're currently at $15. I think they're a little bit overvalued based on some of the numbers that we see for them. And then if we look forward to, if we're using the past month revenue, which was for July, multiplying it times the 8 months that we had before the halving, and then subtract, well, and then adding also the 4 months afterwards that are going to be 50%. I have them at $6.66 to $9.98. Now, given they are going to be growing into the halving still, those numbers should increase, and depending where Bitcoin goes, that's definitely going to help them out as well. So, but based on going historical data, I say they're overvalued a little bit right now, but not much. I mean, top portion would be $13.29 or $15. They're slightly overvalued in my opinion. And I feel like I'm going to have to sneeze here. Oh, man. Heat allergies. Okay. So that's it. Sorry for the late video, everyone. This spreadsheet is going to be available to my Patreon members here later on tonight or tomorrow. It's getting late. It's already 10 o'clock. So I'll try to get this stuff done for you guys for tomorrow. And I still have to do the YouTube members as well. The not the spreadsheets, but the screenshots of all of these dashboards as well for you guys. So that's it. I appreciate you guys. Can't talk. I appreciate you guys watching. I hope you guys have a wonderful Friday. Tomorrow's Friday. We'll see what happens tomorrow. Other thing that I'm kind of concerned about is Hut 8 has not provided their numbers yet. Sue has commented on I think it was Twitter or X Spaces, that they're just extremely busy and that they will be reporting it, but it's too late. Okay. You could be extremely busy, but it doesn't take that long to provide the numbers. that you should already have access to anyways. So it should only take maybe half an hour to an hour to provide those numbers for investors. Now, so I'm wondering, are the numbers really that bad for them that they're kind of holding off and as long as they can? I don't know. We'll find out when they do report. But if they don't report tomorrow, they're not going to be in my monthly metrics that we grade the miners on. So if they don't report it tomorrow, they're going to be out of that. Okay, so just do note that, and we'll see what else happens. Otherwise than that, that's it, I think. Otherwise, I'm going to start rambling on here. So, like I said, thank you so much for watching. I hope you guys have a great Friday and a great weekend, and we'll see what happens tomorrow, and I'll see you guys in the next one. Bye.